Welcome back, CAVUTO Coast to Coast. We are into hour number 2 of the program with stocks rebounding today, finally, after that two-day 947-point plunge we all covered to the Dow Jones Industrial Average. That's the way we started this holiday shortened week. Let's see how we end it and whether there is more trouble ahead. Market watchers Larry Shover and Hal Lambert are both with us here as we start off this hour. It's always good to see both of you. Now, Larry, we had talked a lot last hour about oil again, and that's bounced back. Stocks have bounced back, and you wonder if that's all we're seeing, just this kind of overdue bounce in markets that we needed to see. What do you make of it?
Well, I think it's a big relief to see it, but let's keep in mind volumes are light, liquidity's not there today, and I think people are just bargain hunting. The bottom line is I think we're on hold until next week when we hear from Powell and G20. Yep. Until that time, we've just been a little bit overdone and a little bit of a bounce back today. Yeah,
it's you could find all kinds of assets, I would think, Hal, that are on sale. It's just a question of if you have the stomach, to Larry's point, to buy them ahead of some of these uncertainties that lie ahead. What do you think?
Yeah, no, exactly. But I think the big issue is the Fed. And so we can look for bargains, but the Fed's got to get a better policy here. And I've been saying for months they need to stop raising rates. They need to stop raising rates. And the other thing that no one's talking about is we just hit a target in October. The Fed's now going to reduce their balance sheet by $50 billion a month. So it's $150 billion a quarter that's coming out of the banking system in liquidity. So I'm watching what the Fed's doing and what they're going to adjust to. And the other thing you've got to watch is credit spreads here. We've got credit spreads have widened some. High yields about 60 basis points wider. It's still lower than average.
So that would worry the Fed,
but credit spreads are going to be important. Well, the credit spreads are actually signaling, if you get a widening of credit spreads, that's signaling a slowdown in economic growth and potential recession. So the Fed really ought to be worried about that. Look, we're talking about economic growth. Economic growth is expected to drop to 2.8% in the fourth quarter. That's below where we ought to be. We need to be north of 3% in economic growth.
So Hal makes the argument to, the point we just made, Larry, not only as, I guess, the president's been saying, hey, we need to stay away from this, so I guess we could have a higher stock market, but Hal's saying we actually are seeing a slowing maybe in the economy, and credit spreads are sending a signal, some sort of a warning signal, and the Fed should kind of heed those warnings. Larry, what's your point of view?
I hope that's right. And, what we need is Powell to say we're close to policy neutral and not do what he did October 3rd. Yeah. However, on the other side of things, to be really fair, when we have the hottest jobs market that we've seen in history, it's hard to make a case for is stopping at where we are now because we aren't at policy neutral.
So I guess
we need at least
pace,
2 to 3 hikes to do that.
Is it 4 next year, right, Larry, or is it 2 next year? I mean, that's kind of the debate about how. We know rates are going up. It's just how fast they're going up, right?
Yeah, exactly. I mean, right now the market is barely pricing in 2 rate hikes between now and the end of 2019. Barely. The Fed right now is still pricing in 4. That's a big difference. And just keep in mind, the retail investor who owns $10 to $12 trillion worth of mutual funds and ETFs, I mean, they can get 2.5% on 6-month paper. If that continues, it's just logical that why take the risk of a big drawdown? I can get 2.5% on a 6-month money market.
Right. No, it's a good point. Hal, what's your economic view? You talked about some of the signals from the credit market that we're seeing. We got into that a little bit, I think, yesterday. It's kind of this interesting disposition that the White House is in, where you hear advisors like Larry Kudlow and others saying, hey, this economy is great, not only now, but will continue to be great. And at the same time, the Fed, shouldn't be raising rates, which, the two seem to be somewhat in conflict. But if you're saying the Fed should slow down, Hal, you must think that the economy is also slowing down, right?
Well, I think the economy is great right now. But remember, it takes about 6 months for a Fed rate hike to work its way through the system. So these rate hikes from the past are just now hitting. And you're looking at the housing markets. It's certainly slowed. The auto markets have slowed. So those are the things you've got to look at. But this holiday season should be great. Consumers they have jobs. It should be a great consumer market. Oh, yeah. Walmart reported great numbers. And so I think right now we're in a good spot. But the Fed could overshoot here. That's the issue. And that's what the markets are worried about, is the Fed going to overshoot and we're going to have a big slowdown in 2019? That's what's causing this sell-off. If we could get some clarity that, hey, we're not going to kill the market, the Fed's not going to kill this economic growth, then I think the markets could really poise and jump here.
Or trade, by the way, which you haven't talked about, or something to come out of G20 on trade. It's not, I don't think, just monetary policy, Larry, is it?
No, not at all. I mean, yeah, I think a lot of people are expecting or hoping that President Xi and President Trump walk away holding hands with some type of framework in mind. But on the other hand, I'm not so sure the markets believe that to be true.
Yeah.
And we might be getting ahead of ourselves. This is something that's complicated and might take a long time. However, if a framework, an initial framework is in place, that will be a boon for the markets.
The whole holding hands thing, by the way, that would completely break the internet if the two of them were holding hands in some ways, right? Yeah, good, he says. Thanks, guys. We appreciate it, Larry and Hal.